Hello friends, today I am going to discuss the new topic of money and financial system, that is nature, meaning and motives of money. In the last session I had explained the stages of evolution of the money, and today I will explain what is the meaning of money and what can be the motives of money. Now talking about the nature of money. The type of money in every age depends on the nature of its livelihood. As in the hunting society, skins of wild animals were used as money. In pastoral society, livestocks were used as money. In agricultural society, grains and foodstuffs was used as money. And in Greeks, coins are used as money. So the money vary from age to age in different societies. Now let me explain the meaning of money. So money is difficult concept to define, partly for the reason that it fulfills not one but four functions, and each of them providing a criteria of moneyness. Those are unit of account, medium of exchange, standard of deferred payment, and a store of value. So these are the four functions of money. Another meaning which helps to understand money is the means of valuation and of payment, as both the unit of account and the generally acceptable medium of exchange. So money is the medium of exchange that should be measurable in terms of value and store of value, as well as it should be generally acceptable by all people in a society. Now talking about the definition of money. So according to Professor Walker, money is a money does, and this means that the term money should be used to include anything which performs the function of money, that is medium of exchange, measure of value, unit of account, standard of deferred payment, etc. Since general acceptability is the fundamental characteristics of money, therefore money may be defined as anything which is generally acceptable by the people in exchange of goods and services or in repayment of debts. Now explaining the traditional definition of money. As per traditional view, money is defined as currency and demand drafts, and its most significant function is to act as a means of exchange. Keynes in his general thesis pursued that traditional view and defined money as currency and demand deposits. So according to him, if it is a currency or if it is a demand deposit, then it must be regarded as money. Hicks in his Nature of Money defined money as to act as a unit of account, as a means of payment, and as a store of value. Now another definition given by Friedman I am going to explain here. By money means literally the number of dollars people is carrying around in their pockets, the number of dollars they have to their credit at banks in form of demand deposits and commercial bank time deposits. Thus, he defines money as the sum of currency plus all adjusted deposits in the commercial bank. So whatever the money which can be deposited in commercial bank along with the demand deposits can be termed as money as per Friedman. Now, talking about the main motives of money which are used nowadays. So, motives of money can be classified into three types. First is transaction motive, second one is precautionary motive, and third one is speculative motive. Now, I'm going to discuss all these three motives one by one in detail. First is transaction motive. Transaction motive is basically used to deal with day-to-day transaction. Means it refers to the demand of money for conducting day-to-day transactions, and this motive can be looked at from two perspectives. First is from the consumer's perspective, and second from the perspective of businessman. If this motive can be looked from the perspective of consumer, then it can be termed as income motive, whose want is to meet their household expenditure. And when the motive can be looked from the perspective of businessmen, then it can be termed as business motive, who require money to carry on their business activities. So when money is required to meet the personal requirements or to meet the household expenditure, that can be termed as income motive, and it can be seen from the perspective of consumers. When the money is required to carry on the business activities, then that can be termed as business motive, and it is from the perspective of businessman. Now, talking about the income which a person gets is not continuous, whereas expenditure is continuous. So, to bridge the gap between receipt of income and its expenditure, people hold cash, as people is very much clear that how much income they are going to get in the future. If somehow due to some non-continuity he is not able to continue in getting the income, but the expenditure will remain the same. So this also bridges the gap between the receipt of income and expenditure, and to meet that gap there is a need for the people to hold cash. According to Keynes, transaction demand for money is positively associated with the level of income. So money is somehow related with the income. If higher the level of income, then larger would be the size of money holding for the transactions. If person is having higher level of income, then he will holds higher money for meeting out the transactions. Thus, transaction motives relate to the money to meet the current transactions of individuals as well as business units. Now, another motive is the precautionary motive. So, I'm going to discuss this precautionary motive. What do you mean by precautionary motive? Basically, it refers to the desire of people to hold cash balance for unforeseen contingencies. As future is uncertain and people is not aware what can be the future, what difficulties they are going to face in the futures. So to meet out the emergencies, there is a need of the people to hold certain cash. So people when wish to hold certain money to provide for the risk of unforeseen events like sickness, accident, etc., then that amount of money held under this motive. It depends on the nature of individual and on the condition in which he lives. Thus, the demand of money for precautionary balance is also closely related to the level of money. Higher the level of income, more will be the cash balance for contingencies. So if the income of person is high, then he will save more money to meet out the contingencies. Next motive is speculative motive, and this is the third motive. Speculative motive refers to the desire of the holder to keep cash balance as an alternative to financial assets like bond. And under speculative motive, it is presumed that people can hold their wealth either in form of bond or in form of cash balance. So it is presumed that people can hold their wealth either in the form of bond or they can hold cash. And the decision regarding holding of bonds or cash is also depends upon the expectation about changes in the rate of interest or capital value of assets, that is bond, in the future. So directly or indirectly, the reasons for holding the bond or cash balance is totally depends upon the fluctuations that can prevail in the rate of interest or in the value of bond. And the interest rate may vary inversely with the market value of securities or bond. That is, when interest rate rises, the market value of bond falls. Means higher the rate of interest, lower will be the value of bond. Hence, demand for money for speculative motives become less at high interest rate and become large at low interest rate. That's all for today. Thank you everyone. Have a nice day.